Sarah, it is awesome to have you. Welcome. And we're going to start by talking about a very hot area that straddles individuals and business, and that is the no tax on tips and overtime. So talk a little bit about what changed.
Yes, exactly. Thank you, Leslie. So really, we've heard a lot about tips and overtime in the news. So what actually is in this law? And that's two new deductions that are available. They're each worth up to $25,000, effective for 2025 through 2028. Individuals will not need to itemize their deductions in order to benefit from these deductions, but they are each subject to phase out. So to the extent that you reach those limits, the available deduction is reduced. The tips deduction will be available for qualified tips, and that's really voluntary cash or charge tips paid to those in occupations that customarily and regularly receive tips prior to this year. So what are those occupations? Well, the good news is by October 2nd, the IRS will be publishing a list. How will individuals know the amount of qualified tips and qualified overtime that they received? Well, that's where the business provisions come in. So businesses will be required to provide on their information reporting, think those W-2s and 1099s, the amount of qualified tips, the occupation of the tipped employee, and the amount of qualified overtime to their employees or other service providers. Now, we talked about this is actually effective January 1st of 2025. So that could cause some employers some difficulty in reporting for this year what those amounts are. Fortunately, the IRS has told us they'll provide some transition guidance and reasonable methods for employers and other reporting entities to approximate what the qualified tips and qualified overtime were in this first year of reporting. So more information also on that one to come. The next provision that impacts both individuals and businesses is this increased threshold for 1099 reporting. So really, since the 1950s, certain aggregate payments after $600 a year had to be reported on a Form 1099. What this legislation does is it takes that $600, it increases that to $2,000, and then ties that amount to inflation. So what does that really mean for individuals? Well, it means you may not receive as many 1099s as you did in the past because maybe you're paid more than $600, but less than $2,000. What it doesn't mean is that that's no longer income to you. This is really a paperwork reduction type provision and not impacting the taxability of that underlying income. What does it mean for businesses? Well, it's pretty good news for businesses because really businesses will also, on the other hand, be issuing fewer 1099s. So the administrative burden that's associated with that could be lower for a lot of businesses. So really that covers those two provisions. Leslie, thanks for giving me the opportunity to present on those.
Yeah, thank you for joining us. And I think as you've illustrated here, we've got the gift of time with this. And so use that time wisely to start planning now and get with your payroll provider and get ahead of this reporting.